Hey, what's up, traders? It's your boy Jay, and today we're going to talk about vertical debit spreads, all right? Because I'm getting a lot of questions on how I grew my small account quite a bit, and I was just using pretty much vertical debit spreads. Now, I got a lot of questions saying, hey, I don't know how to do this. I don't know how to enter a vertical debit spread. Why do I even want a debit spread when I can go out of the money on naked calls or puts? So this video is going to be about how you can do vertical debit spreads and why. Okay, so you could do debit spreads. It could be bullish or bearish. All right, it doesn't just mean you think price is going up. If you think price is going down, you could still do a vertical debit spread. All right, so basically a debit spread is trading two contracts on the same side. You're just buying one and selling the other. All right, so it's not naked. You're actually covered because you're buying one and you're selling one. So what that does is actually limit your risk, but a downside is that it caps your gains. Okay, so we're going to go through some examples of how you could set up a debit spread and some reasons why you would set up a debit spread in this video. So stay tuned, and yeah, this is a great strategy for people with not only small accounts, but people who want to lower their risk and still play, stocks like I play, large cap companies like Tesla, Amazon, Apple, Microsoft, because those in the money contracts can be very expensive, and this gives us another way to lower our risk and actually participate in those stocks with lower amount of capital. So we're going to go through those, how to enter them on a couple different platforms, because I know you guys like trading on, some of you trade on Robinhood, some of you trade on Tastyworks, some of you trade on TD Ameritrade. So I'm going to go through all of them in this video, and I hope you guys learned something about vertical debit spreads and how we could place them on our accounts. So let's get into it. Let's say we're bullish on Apple, all right? I'm just using Apple as an example, not telling you to get into this trade today or tomorrow, but let's talk about Apple, all right? So Apple, let's say we have a target, we're bullish, we think price is going up to 470. We'll just give it till the end of next week, all right? Not this Friday, but let's say we think by next Friday, Apple is going to 470. And we don't want to spend the money for that 470 contract, or we don't want to spend or have enough money to play any of the in the money contracts, right? We'll go over the prices of each of them, and we'll see which ones you're better off with. So let's break this down. Let's just say, we have our target 470 on Apple. I drew these two lines for you. So you could visualize and see the different strikes that we're going to pick, because we're buying one, like I said before, we're buying a strike and we're selling a strike. Okay, so in this case, we'll just use 465 since that one's close to going in the money, and then 470, we'll sell that one. Because with a vertical debit spread, you're buying one contract and you're selling one contract in the same direction. So they're both calls, but you're buying one and selling one, all right? So I'm going to show you what happens when you do that and how it lowers your risk and actually kind of caps your gains, all right? So your gains are going to be capped, and we'll see what the max profit is going to be on this trade. So let's do this on TD Ameritrade to start out. And basically, to start off, we're going to need Apple above 470 by the expiration that we pick, okay? So I'm going to go ahead and bring over Apple right here, okay? There's Apple. Oops, TD Ameritrade's been crazy. Like, look at this. My chart is actually frozen right here. Here we go. Let's go for August 28th, all right? Let's go. We're going to say next week, right? Today is August 18th. We're going to go with August 28th. Now, on TD, instead of up here, so first off, you go to your options grid, right? You go to click trade up top, type in Apple. Now, we're going to go to option chain. And right here where it says single, you see where it says single? I'm clicking right there for you. We're going to go with vertical, all right? We're going to go with vertical, and now you see it already has a bunch of strikes, 2 strikes for you. We're going to scroll down and find the one we want. It should be already here. This is the default $5 wide spreads. So we're going to do this 460 by 465, and we're going to click it once. Now it's going to bring up this little tab, all right? So we're going to go down, 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 bring this to 1, just to give you an example of what it's like and how much it costs. My minimum size that I always do is 10. So I have to bring it down to 1, right? And 460 is the one we're buying. 465 is the one we're selling. We see that right here. +1, -1, buy, sell. 460 by 465. They're both calls. And now this is going to cost us about $2.30, right? That's the mid price of this, okay? So basically, when I click confirm and send, it's going to show us that this costs, look at the cost right here. The max loss is $233, and the max profit on this one is going to be $267, all right? And that's per contract. So you can see the risk to reward isn't that great, but these you're trading lower risk, all right? So this is just an example of one. These debit spreads can give off a lot of gains and better risk to reward than this one example right here. But for us to break even, we're going to need Apple. It shows you right here. To break even, we need Apple at 462.33. Max profit is going to be 267, and max loss is going to be 233. So that's how you can play Apple for, half the stock price. And let's just say, we have a further target on Apple. We think it's going to $500 by expiration, by August 28th. Right before the split, we think it's going to go somewhere near 500. Well, let's click the 495 by 500 and see how this one looks. Again, we'll drop it down to 1. We'll purchase 1. Now, this one looks a little better, but you're going to need a bigger move, right? So this only costs you $39 to make 461 in this example. All right, so that is a pretty nice risk to reward right there. $39 for 461 if Apple is above the strike you sold, so the 500 call. If Apple expires at 501 penny, you're going to get that max profit, all right, on this trade. So these are two good examples, and that's how you would just enter that trade. And you always want, for max profit, you always want it to price to be above the strike that you sold. Okay, so in this case, it's 500. In the other example, it was 470, right? So the further out of the money you go, the more profit you could potentially make. But let's look on the single, right? Let's look on the naked calls. Those 470s cost you, look how much? $600. All right. So this is a good way. And if price doesn't reach 470, you're losing that full $600. With the other one, with the vertical debit spread, you're only losing $200 on that 471, right? And if you think it's going to 500, you have to risk 180. And Apple's really got to move up above 500 for this, or actually above 501.88 for you to really start making money on that trade by expiration. So you're going to potentially lose the whole 180, where in the other case you were only risking what, $40 to go to 500. So that's how you enter vertical debit spreads. I'll show you on another platform how do we do it. But yeah, I hope you guys are starting to see the power of these debit spreads, and how you could, lower your risk and still reap the rewards on these trades. So next I'm going to go to Robinhood. And I actually have a vertical debit spread on Tesla that is in the money right here. You see that one? Vertical debit spread on Tesla. This one is up 270%. So I spent $140 to play Tesla, and now it's worth $518. Okay, so that's just a crazy example for you on Tesla. But here, let's go to the same one on Apple, and let's go. This is my small account, so I'm not worried about showing you guys numbers and stuff. This is just a challenge account. I actually started this one with $1,000 and now you see it's at 4,000. But let's go to trade Apple options. Now for Robinhood, you're going to need margin enabled and options enabled for all brokers, really. You're going to need margin enabled to do credit spreads and debit spreads, and you're going to need margin and options enabled. Okay, so. And I think you need $2,000 in your account on Robinhood in order to do spreads. So, yeah, once we got that out of the way, now, a little different here on Robinhood. I don't know if you guys are using Robinhood. If you're not, just skip over. We're going to do Tastyworks next, but let's pick that same one, right? It was the 465 by 470. So we bought the 465 call, right? You click the little plus. Once you have spreads and options enabled on here, so after you get options enabled on TD, you're going to need to tell them you want to upgrade to spreads, okay? I think you just have to upgrade to like gold or something. I'm not too sure. But there's a little tab in your account that says upgrade to spreads or the next level of options. Do that. So once you get in here, you're going to click plus sign, right? Because we got to pick 2 strikes. And make sure up here you're on buy, call. Now we go to our 465. You see that one's $8.65. And now we're going to click sell and we're going to click 470. Click the little plus and there you go. This one, same exact trade as before. So we're getting total cost of 188. All right. Now if I go to click continue and click 1, the max cost is 188. All right. So that's how you do a call debit spread here on Robinhood. Okay. Now let's do it on one last platform, Tastyworks, so you guys can see how it goes. All right, so I hope you guys are enjoying this video and learning how to do these debit spreads. I might have to sign into Tastyworks real quick right here, log in. But yeah, debit spreads are a good way to lower your risk and actually grow your small account with as low risk as possible. And you could see, you know, if you get nice moves in a stock, you can make a lot of money just trading spreads. So let me get in here on this Tastyworks trading platform. Here we go. And now let's do the same trade on Apple. Okay, so once you're in here, I have another challenge account on Tastyworks. Once you're in here, go type in your stock. Oops, that's Alp, not Apple. Apple. There's Apple. There you go. And they have a platform you could download. I don't have it downloaded on this computer. I have it on my laptop. And there's a phone app too. It's all pretty much the same. Now Apple, you're going to click strategies right here. Then you're going to click vertical. And right here it brings down a little drop down. Long call vertical. That means you're buying a call vertical. Okay. So you're going to click that. And now you could choose your expiration. We'll go to August 28th, right? And then we'll click the strategies again. And now to move your strikes up or down, you could easily do it with this right here, right? So we'll do 465 by 470, and there you go. Same price, 188. Click review and send. So make sure you're on these. You could drag them. Whoops. You want to buy one and sell one. We're buying the 465, selling the 470s. And this is how you do it on Tastyworks. Review and send. Right? So we're risking 187 to make 313. All right. So the max profit on Apple is on this Apple trade is $313, and it only costs you $187. So yeah, on TD Ameritrade, TD before the close, they kind of have weird prices. So we'll see at the open what these actually go for, because this one might be a good trade to take with a low risk. So yeah, the max profit for this trade is going to be 313. All right, so that's how you do it. You click send and boom. So for the challenge account, I'm going to be doing mostly these kind of spreads. All right, so mostly those kind of vertical debit spreads because they have the lowest risk, and you could do that with a small account. So that's how you enter those trades. I hope you guys enjoyed this video and learned a little bit about how you do call vertical debit spreads, because I know it sounds a little confusing. So I'm trying to make it as easy and simple as possible for you to understand. And if you need more help, I actually have a whole course in detail that goes in detail on everything you need to know about options. So I learned the hard way. I spent a lot of money learning options, and I wanted to bring you guys an affordable options course, and that's what I did. So the link's down below. This video is sponsored by my options course. So go get that. I'm sure you're going to learn a lot about options, especially if you're a beginner. It's built for beginners that know nothing about options. So that's how you do vertical debit spreads. And yeah, if you don't want to join the course, I got a free Discord down below, and I'll show you my plays throughout the day. And yeah, pretty much that's about it. So like and subscribe if you learned about vertical debit spreads here, and you're going to start using them with your trading strategies. So enjoy. Hope you guys, if you ever make money using a vertical debit spread, reach out to me. And I hope you guys have a great night.